Markets tumbled in March as escalating tariff concerns wiped out all year-to-date gains, with Q1 ending down almost 5%. With March in the books, let's review how we got here. January started the year up on optimism for a more favorable business environment. However, that optimism has completely reversed. What's to blame? Tariffs. February gave up most of the year-to-date gains, with investors still hoping the tariff talk was just for bargaining. However, trade war threats escalated further in March, with markets taking its biggest monthly dive since 2022. Tariffs were once again the focus in March, but how's it different from last month? Well, first, some of the initial tariffs were actually imposed and expanded on. China was bumped to 20%, while the global steel and aluminum tariffs also went into effect. Canada and Mexico's tariffs were briefly imposed, but essentially walked back pretty quickly. Basically, the tariffs and its potential impact became real versus just chatter. Second, other countries are retaliating. In the first round, sure, China retaliated with their own, but Canada and Mexico folded pretty quickly, making deals for delays. However, in the second round, Canada and Mexico were not so accommodating, and nor was the EU, all threatening a trade war in return. In the upcoming third round, we expect even less inclination to negotiate and more aggressive retaliation. And finally, the consumer is starting to freak out. Consumer spending drives our economy, and while incredibly resilient the last few years, tariffs seem to be the last straw. So what's next? Well, obviously more tariffs. On Wednesday, the White House announces a barrage of additional tariffs. We expect fairly quick retaliation from impacted countries in the coming days after. Negotiations will likely be harder this time, as other countries are already partnering up for better leverage on the retaliation. Markets are bracing for the volatility. Obviously, the best case scenario is the White House says, never mind, but that's unlikely. A good scenario at this point would be lower impact targeted tariffs that will trigger less retaliation. We're definitely hoping it won't be the universal global tariff that's been rumored. As mentioned before, markets are near correction territory, and the next couple of weeks will likely determine the next step in either direction. We continue to need to see tariff talks go away and the macro to stabilize to get more positive near term.